let's just dive into Bitcoin here. If you look at Bitcoin, we've broken this 6,200 level. This was a key level. The
Yeah. Mhm.
6,100, 6,200 level. This is a big trend line. And again, this is a daily chart.
Yeah.
And so you can kind of see we had this wedge taking place over the last 6 months. We
Uh-huh.
broke the 6,200 level. Then we came back down and tested this, 58. And then we found some
Mhm.
support. We ran down to 5,200, which is an old level from last year, kind of right around this
Yeah.
neighborhood.
Hmm.
And you kind of see we bounced back. We could not get, we were making lower highs here, could not get back, couldn't even retest these trend lines. And then today we actually saw this thing break 5,000. So
Yeah.
what I'm thinking and what I'm seeing in this market is this is kind of where we're going.
Well, that's what you've been saying for the last, what, 3, 4 months?
Yeah. Is
You know,
once
ever since.
5,000 breaks, we're going to cut through 4,000 like butter. Like, kind of see this range here.
Yeah.
This is kind of where we're going. I strongly believe that we will see 3,000 to 3,200. And the reason I like 3,200 is one, you have some nice wicks right here. And also, 3,200 is the break even in China to mine one Bitcoin. So you have to understand, as miners fall below their break even point,
Right.
what happens? They're not going to mine anymore. So in
Hmm.
terms of scarcity and supply and demand, well, okay, now the supply of new coins coming online decreases, scarcity increases, demand is the variable. So if you have
Hmm.
demand constant, then you'd have to assume that price would increase, right? As you have less and
Yeah.
less miners. Granted, the side effects is you have the network slow down and the hash rate slow down, and then the efficiency of
Right. Then the block time just gets ridiculous. That's when you're looking at like 2, 3 days per transaction.
exactly. So there's several scenarios, right? Because then that
Mhm.
could necessarily get real negative, and you could see the spot price fall even farther.
Right.
I don't think that's going to be a scenario we see. I think we're going to hit 3,200, and there's going to be a lot of people trying to protect those positions.
So,
3,000. If we look back here, this 3,000. Sorry, I didn't mean to interrupt your
no,
time.
no, no,
Let me
keep going.
finish.
No, no, keep going. Keep going.
If we look at this 3,000 level, right? We tested
Mhm.
it, came back off to 1,800, tested it again, and this is when the real move started last year. Was when we broke this 3,000 level. That's kind of when we were off to the races, and you can see we retested it right here. And so what we're doing is we're coming down to give that 3,000 a second test, just to validate that's key support, and then we could potentially move higher. And it's gonna be a choppy trade, but I think we're gonna be bearish kind of the rest of the year, come down here and then slowly grind forward. But sorry,
Yeah.
what were you saying, Tom?
So, my question is, what was what do you see in terms of, is it purely a technical move to the bottom, or was there a fundamental catalyst?
No, in my eyes, in my view, everyone's going to try and paint a fundamental story on this.
Yeah.
This was a big technical play, and then the snowball just kind of rolled. That's one thing you notice when we see the market kind of roll over, when there's any big event in the marketplace. A lot of people try and put some kind of narrative behind it because a lot of people are fearful of what they don't understand. They try and search for reasonings for what they don't understand.
Mhm.
Quite honestly, it was just a technical play. The order book thinned out. A lot of bids got pulled. And traders like me and other guys I know in the industry, I mean, that's just kind of cardinal rule. You see this break, you just got to get flat and you just
Right.
kind of hang on and you just kind of wait to find some support. Like I'm sure some guys got in here, and then when it didn't break out really here, then they peeled their positions back off, and that's kind of what you're seeing here.
So,
Um, and this
so
is what
you
we
know,
call a bear flag, and I think we're going to see this
right.
continue all the way down to 3,200.
I think, yeah, if I was doing a little fun exercise today, I was looking at snapshots of May
Mm-hmm.
every year, uh,
Yep.
going back in the historical profile of CoinMarketCap. It's pretty funny to look at the top 10 coins
Oh yeah.
and like just how often they change. It's so funny.
Yeah. Everyone always gets wrapped up in those coin market cap kind of headlines, but
I know.
here's something interesting. If you want to see something real interesting here, let me pop this screen out and get back to the main screen. Um, Bear with me one moment. So we're looking at Bitcoin here, right?
Hmm.
So everyone talks about parabolic. Everybody always talks about, and I'm on the Coinbase feed, but everyone loves to talk about parabolic moves, right?
Hmm.
So if you were to look at this, right? If you look at this, This is fucking parabolic, right? Look at the prices though.
Oh, yeah.
Now look at this move, right? Another parabolic move, crazy move. And then it comes off, right? And again, the time frame is very different, but just an idea. Like parabolic, you see pretty much a 90% retrace. Oh, look where we kind of came down to. See this 475 level, tested it, rebroke, and then look, we came back and tested it. Tested it once, tested it twice. Another example of quote unquote parabolic move. You see what I mean? And that's what people get confused is they get all caught up in kind of this and don't get me wrong, it's a large move, but it's all relative, right? So if you go back here to these May, and that's one thing we're going to talk about on the rest of the video is some of these other altcoins is kind of where the big support levels are. Like we've broken some key levels across the board. I think things are going to get real ugly here in the next month and a half. And you know, what is that? A famous Rothschild, J.P. Morgan saying is when there's blood in the streets, that's when you want to buy. There's
Yeah.
gonna be blood in the streets here very shortly. Just wait for all the people that you know that have been diehard crypto guys that say, you know what, I'm over it. And you know what's interesting is I had some conversations with some people this week who are heavy into crypto, and they're kind of starting to wear it a little bit. You know, they're kind of getting fed up. They're like, I don't know why I did this. I'll just be happy to break even, or I'm just out. I'm going to take my losses. So that's kind of what we're seeing. It's going to get a lot uglier here in the next 2 to 6 weeks. But again, that's why we're launching our second fund is to capitalize on this opportunity. I think this is a prime time to get exposure over the next 6 weeks because I think 2019 and early 2020 are going to be some of the most lucrative times in the history of crypto. All right. So anyway, so we're looking at some Bitcoin here, and then let's take a look. This is also very interesting. So this is open short contracts on Bitfinex. And kind of what we saw is you can chart this just like any other chart. And this is, you can see open short interest kind of got crushed. And Bitcoin price didn't really pop. Well, look what happened here. We saw a big spike in short interest. And now, to me, we met this resistance level. I think this thing's going to go higher. I'm expecting Bitcoin short interest to come here and maybe even break these highs. And that's going to be a catalyst for sending Bitcoin dollar spot price lower, right? Because these are inversely related. So this is really key to understand. Not too many people watch this open short interest, but it can be kind of the key to the castle if you know what you're looking at. And again, these are 4-hour bars. And kind of the same thing, what's been interesting, so down here below is Ethereum. Again, Ethereum shorts, they're kind of leading the charge. You can make an argument this is kind of a very weak, ugly head and shoulders, but again, I think we're kind of setting up to make new highs here. Nice little double bottom, and I think we're going to grind higher. Again, the algo that we run got us out of everything on what day was this? 15th, and 14th, and the 13th. So you can see we started getting short signals actually on the 11th and even as early on the 9th on some of these assets.
Nice.
So that's been real beneficial, and you know, it's kind of nice to have those leading indicators kind of driving into the market. So
Can I just talk about, I just want to get your opinion on something.
yeah,
You know, I just find this, all right, so we've been talking for about 4, 5, 6 months about this move to the downside, Bitcoin going to 3,000, which obviously takes everything, almost everything
yeah,
else.
we've been talking about it since July
Yeah.
or June. Rather.
I find it really interesting that this is all happening less than a month before BAT goes live.
Well, remember, part of the dialogue that we've discussed is we have to see that market flush. And if you look at price action, right? If you look at price action, I'm just going to pull Bitcoin up because that's what most people watch. If you look at price action since May, or even since February, yeah, we had these crazy highs, but look at this, right? We've kind of dwindled down. And then another key thing is if you look at volatility, so let me pull this up. If you look at volatility, right? So what these are, this is volatility, right? So if we look at volatility across the board, it's been narrowing, especially right here. So Bitcoin's the gray line. Look how close to zero we were. And then this dip is the move we just saw. This move is nothing. We're going to get to these magnitudes. See these wicks down here? This is the magnitude I expect this to move to the downside. And that's something we've been talking about all summer. This market has been winding up. Like imagine like a spring, right? You're compressing a spring, compressing a spring. Well, it was hard. It looked like we wanted to break to the top side. It really did. It looked like kind of here we were trying to break it out to the top side. It failed, and now we're moving to the downside. And this is what I expect to see. We have to see a flush, and kind of majority of people just kind of give up on crypto. And then guess what? What does that allow the institutional guys to do? Is they're going to come down here and scoop it up. I mean, I'm an institutional guy. I'm sitting here waiting, trying to scoop it up at cheap levels. Like, if you think about the run that happened in November, December, January of last year, yeah, a lot of people made a lot of money. But do you really think, and I'm not a conspiracy guy whatsoever, I'm just a realist. Do you really think big money institutions and the serious players in the world are just going to let a huge parabolic move happen and not be on the trade? No, they're going to get everyone to hold the bag, let the market grind, and then we're going to see people give up on it. And now this is when smart money is going to work. On this flux, this is when a lot of guys, I mean, I'm speaking with family offices on a daily basis. People are trying to get exposure to crypto, and that's why we're launching our algo fund in January. We're going to play from the long and the short side, leveraged, and there's going to be a tremendous amount of opportunity. And this is, again, something we've talked about. We need to see this market flush out, and that's what we're seeing now. And to me, this makes me very, very bullish. Not yet, right? Not yet. I'm going to wait. But yeah, Tommy, I know I kind of went on a tangent there, but this is kind of the picture that we've been trying to paint for the last 6 months. Granted, has our timing been a little off? Yeah. Has the market tricked us a little bit and thought it was making a break to the upside instead of rather going down? Yeah, but this is kind of what we've been planning for and looking for the last 6 months. Important to take a look at. We discussed this in our weekly market primer that we put out here. Something really, really important to take a look at is a correlation table. So if we were to look at this correlation table, this also paints the same picture. You think about some of the worst performing cryptos we saw today. Litecoin, Monero, Zcash, right? Ethereum. Look at how strongly they're correlated to Bitcoin, right? 0.8, 83%, 84%, 75%. And then look at some of the quality, such as XRP or Stellar. Look at the difference in the correlation to Bitcoin. Again, because of that, that's why I kind of like, even though Dash is terrible technically, I do like it. Same thing with them. They have my attention. And that's something that I'd like to look at is these correlation tables and just kind of understand where the quality is in the market. And I would say Ripple paints XRP paints the best picture of this, if you get what I'm saying. Well, I was honestly surprised at how easily we kind of dropped through 5,000 a day. That was kind of astonishing to me. I thought we were going to be a little bit firmer with that. But overall, this is kind of what I'm seeing in the crypto market. Very bearish picture. I think the key right now is you got to be patient and really, really pick your spots and be very disciplined with your spots. Let the market come to you. Now is not a time to be an aggressor. Now is the time to be very passive and patient, in my opinion. So that's kind of the wrap up of the technical analysis for today and this week.